Monday, the 20th of August, 2012. Welcome to this regular weekly review of the FX markets. We're going to work our way through the majors this morning and then some of the commodity currencies and some of the commodity crosses. The key objective of this session is to highlight lines and levels of interest when it comes to taking a trade. Before we proceed with doing that, just a couple of words of caution. We're in the middle of the month of August now, and August is often described as a month for addicts and idiots. And so when it comes to taking a trade and when it comes to actually exercising the practical aspect of being a trader, when it comes to kind of pushing back that barrier, where all of the intellectual exercises take place and your fingers on the trigger and it's ready to kind of push it, you have to exercise a little bit of caution and you have to exercise a little bit of care. One of the things which I like to do is to trade volatility. And when you see volatility in the market, when you see the prices moving and you see it flying in a particular direction, you know what? Everything's quite easy. It's easy to jump on the back of that moving train. It's easy to say, right, she's moving in this particular direction. Let me just wait for a pullback to take place. And once that pullback takes place, then I will get in on the back of this action and I'll try and ride the boat at that particular time. When the price isn't doing very much, when she's just stepping a few pips at a time, when that volatility isn't there, then generally you want to be exercising caution, and you're better off taking your analysis and saying, right, this is going to be an intellectual exercise, rather than backing every single horse with every single penny that's sitting there in your broker account, right? So a little bit of caution. Just recognize that the markets are affected by seasonal factors. And one of those seasonal factors is the holiday season. The month of August, sometimes it can be great. Other times, well, it can be pretty much like what we're seeing across the board on many, many pairs right now, where we're locked quite tightly in consolidation, particularly on the majors. And what it means work-wise is that, you got to sit on your hands a little bit and say, all right, we'll wait for it to pick up. We'll wait for things to start progressing, and at that time we're going to get excited. What that means for me is that, I'm quite happy to take a trade, but it needs to be at the level. I'm not one of those guys who likes to fade a 200, 250 pip, 250 pip prices. I'd like to get in where I can risk 30 pips, 35 pips, 40 pips. In any case, it has to be risking under 50 pips. And I like to get good risk definition. When I'm getting good risk definition, I'm prepared to play. So that pretty much means that the price has to be at a line. It has to be a level for me to get excited, right? I'm not prepared to chase it if it means having to cover a very, very wide space in terms of stops. Okay, let's turn towards the first chart. So all of those caveats said and all of that stuff mentioned, let's turn towards the charts. We'll start off with the USD JPY. And so when it comes to the USD JPY, we have a level which we had isolated, which was coming in at the 78.80 area. And that 78.80 area held up as a resistance pretty well. On the first occasion, the second occasion, the third occasion, the fourth occasion. So this is an area which we've marked over the course of the last 2 or 3 weeks. And as far as directional bias is concerned, it was the most important area. And what we had said is that, as long as the price is able to remain below the 78.80, we're going to keep a technical short bias. Only if the price breaks through that, then on a pullback, we're going to be looking for the long trades. And so it transpired that after taking multiple trades short on USD JPY at that level, the last attempt at the level would have had you stopped out, and the price has started making its way north through there. So we're looking at 78.80 now, and we're saying, well, you know what? If you were acting as resistance, then on a pullback, I would very much suspect that you are going to be giving support. All right. So, okay. Sorry, 1 second. There seems to be trouble with the screen share. All right. Okay. So we were looking at the 78.80 area on the USD JPY. I'm just going to try and get that screen capture going again. Hopefully it should be coming out. All right, so we were looking at the 78.80 area, and we've seen that 78.80 act as a resistance on a number of occasions. Eventually, the price broke through that, and once the price had broken through that, now on a pullback, what we're saying is that, okay, we're going to be expecting for the same area to be providing support. She started breaking. How deep that pullback is going to be, how far back she comes, that kind of remains to be seen, right? That kind of remains to be seen. We're about 70, 80 pips away from that right now, and as far as the structural move was concerned, we've seen her hooking through that level, right? But nevertheless, I think what's important here is bias, and I'd say as long as the price is above the 78.80 area, then it is fair to be maintaining a long bias on the USD JPY, and that bias will only adjust to a short bias if she's able to break back below that zone, right? So that's the USD JPY. We now have a technical long bias looking to buy on a pullback, and as opposed to the selling, which is what our previous all right, so we're getting some trouble here. Hold on. All right. Hopefully we're back. Whew. All right. Okay. It looks as though we're having trouble with the screen capture software. So whenever I trigger that, it's causing problem. All right. Okay. So rinse and repeat. 78.80 support and resistance on USD JPY. I can't repeat that again. All right, let's move on. Euro USD. All right, Euro USD, the key technical level that we've been looking at on the Euro USD is coming in around the 24 handle. It's based around this cluster here, and that cluster extends. Let's just see how far it extends. So that cluster extends somewhere between 2380 and the 2450, 2460 area. I've mentioned before again last week, from a structural point of view, as long as the price is able to remain below that 24 handle, as long as it's able to remain below that price cluster, even if it comes up and consolidates in that zone, then technically the Euro USD remains a short. Now, as far as data is concerned, there's not a lot of data on the calendar this week, but there are a couple of key events which could start acting as a trigger for volatility on the Euro USD. And the first of those is that we have a Spanish bond auction coming up early this week, and it's going to be interesting to keep an eye on the yield for those Spanish for those Spanish bond auctions. The ECB has pretty much promised to keep a lid on those yields and to intervene in order to keep those low. So we'll see how that comes in. But more importantly, the Greek Prime Minister is doing his rounds of Europe. He's going to be visiting Germany and he's going to be visiting France. And I suppose the market will be keeping an eye on announcements which come, or statements which are made as a result of those visits. The Germans obviously still taking a much harder line than the French, and so we have those events there which could potentially act like a trigger, right? But as far as the long-term technical bias is concerned, or as long as the technical structural bias is concerned, at the moment the shorts have it, and I will continue to sell the Euro USD as in that 24 to 2050 hot zone, and I will only consider a purchase of this instrument if the price is able to break up above that. So she needs to break through the 25 handle. Then on a pullback, you'd say, well, there was resistance in that area, and on a pullback, we'd look for that same area to provide some element of support. I know at the moment on social media, there are a lot of people who are calling the Euro USD long right now. I would just exercise a lot of extreme caution and extreme care about that. Trends have a habit of not changing so easily. When they do change, you would expect to start seeing breakouts in that direction. And, considering the fact that she's made 2,000 or 3,000 pips down, it's not unusual to be getting pullbacks which are 300 pips, 400 pips, 500 pips, right? That is not something which is unusual at all. It really is about the support resistance structure. If you're looking long on the Euro USD, I suppose the best hope that you have is the lower trend wall, which you can draw on your screen like that. But the way that I'm seeing the Euro USD at the moment is that if it happens that trend wall is broken, and the price wants to break down through that, I think that would end up becoming a trigger for further acceleration to the downside, right? So from a structural point of view, I have my zone marked. I've marked a wall taking the highs from the month of June, so you can see the downtrending wall there. We have a lower support wall, just dragging the price, but from a support resistance view, the outlook has not changed at all. Euro USD remains a technical short as long as she's remaining below that 24 handle. Turning towards cable still very much locked in consolidation. This isn't at all out of character for the cable. So if you're looking back on the screen and you're scrolling back on the chart, you'll see, she often goes into these periods where she gets locked in a 200 pip range, 250 pip range, sometimes even 100 pip range, and it can stay like that for a very, very long time. We're now heading into possibly 12 weeks of consolidation on the cable, and again, as far as structural levels are concerned, it's all about this cluster here, right? So it's all about this cluster which starts at around about the 5730 area, and it extends to the 5840 area. That cluster is about 100 pips wide, and as long as the price is able to remain below that cluster, then the technical shorts remain intact, and we will look for a continuation of the momentum to the downside. We don't really have a cause for believing that the direction of the trend has changed here, right? All that's happened is that we had momentum in the early part of the year. The price has pulled back and gone into a consolidation, right? So we wait to see. The longer she squeezes, the harder that breakout is going to be, right? And that's always something which is a lot of fun if you end up being on the right side of it. But what I prefer to do is to say, okay, let's wait and see. If it's going to break, let that happen, right? And so either we're going to get a breakdown and the price is going to break through our support wall here, or we've got this horizontal level here, and what we're going to find is that the price is going to break up through that level. In any case, you let it break, you let it pull back, you take your entry, right? While it's consolidating, you just want to exercise caution, you want to exercise care. It can be a lot of fun when the buyers are winners and when the sellers are winner as well, but usually by the time you realize she's in a range, she's about to break, and you don't want to be overly committed to a position or to a bias or to a trend direction. at that given moment in time when that happens. It's just going to be a recipe. It'll become a recipe for disaster. So I'll sit on my hands. I'll wait for her to break. When she breaks, we'll start getting excited, right? It's not that far away. There's a couple of trading weeks left in August, but I expect by the beginning of September, we should be back to the regular ebb and flow of things as far as this particular market is concerned right now. Turning towards the Swissy, the dollar Swissy, as far as correlations are concerned, is hugely inversely correlated to the Euro USD. It's not been uncommon for that to happen on a minute by minute basis sometimes. So a bullish minute on the Euro USD would mean a bearish minute on the dollar Swiss. And we've seen that happening minute by minute and hour by hour and daily by daily. As well, when it comes to identifying the key structural markers on screen, it's exactly the same too. All right. So what we have here is a support cluster. That support cluster comes in between 96.30 and the 97 handle. So somewhere between 97 and 96.30 handle. And I would say that as long as that cluster is holding, as long as that cluster is holding, and as long as the price stays above that level, then it is fair to maintain a technical long bias on the dollar Swiss. Only once the price is able to breach that, so if it happens that the price is able to breach that to the downside, then at that point you would start getting excited and say, you know what, I can start selling this on a pullback, rather than looking and that potentially there's a change in the direction of the trend taking place here. But again, at the level that she's at, I would look at that as a support cluster first. I would consider trend continuation first and say that she has to move back north. Only when she breaks down, then on a pullback, I'd be saying, all right, let me start looking to sell on a pullback. So this is a level you can see how well the price reacted when it was breached, and it was breached by about 30. It was breached by about 30 odd pips. She gave quite a strong reaction there. She's given strong reactions here at this level now on multiple occasions, 1, 2, 3, 4, 5. Ordinarily, someone would say, you know what, there's been 5 reactions there, 6 reactions there. The next time it goes there, we're going to look for the level to breach. I'm the kind of guy that says if the level's going to breach, okay, let it breach first. Once it's breached, then we'll play. Until then, it's support, and it carries on being support until the price actually makes its way through there. So I'm not going to try and trade an expectation or to trade off an anticipation here. It's a case of if the momentum wants to develop in that particular direction, let the momentum develop in that direction, and at that point we give chase. As long as the block holds, we will maintain a long bias on the dollar Swissy. One of the points which I mentioned last week, and this is very, very important when it comes to analyzing trend, is that if the price is going to take off in any given direction, sometimes you're better off letting that happen and catching the last 5%, the last 10% of a move, than anticipating a reversal and getting it wrong on several occasions, right? And that's what happens when you're anticipating a reversal. You won't be wrong once, you'll be wrong on several occasions. So you can miss the first 10% of a move, you can miss the first 20% of a move, heck, you can even miss the first 90% of a move if you're just looking to catch the last 10% of it. But at least when you're trying to catch that last 10%, all of the momentum building up for that trade will be in your direction, right? So in this instance, and there's times when I'm aggressive and there's times when I'm conservative, when the chart setup is like this, I tend to be a little bit more conservative and say, all right, let it happen once. I can only be wrong once when it comes to marking these particular levels on the screen. Okay, let's turn our attention towards the Aussie. So we have the AED-USD. AED-USD, as far as the structural levels are concerned, last week we mentioned about the 440 area, and we mentioned about support coming in, or the established support being here at the 440 area. We mentioned about the established support being here at the 440 area. The price made its way back down to that area, not entirely unexpectedly. We were looking for some weakness on the Aussie, and now as far as trend direction is concerned, or as far as structural point of view is concerned, it really is about this 440 area. As long as the price is able to sustain above 440, then technical longs remain in play. If the price is able to break below 440, then on a pullback, you'd be looking to start selling. What is interesting on the Aussie right now is the way that she moved back to that 440 area, right? So we've seen her channeling, and if I just kind of mark, don't need to use that tool. If we just mark the channel on, okay, we've seen her channeling back toward that 440 area. Sometimes when you get this type of price movement, it does become a precursor to the price breaking down. All right, and if she's channeling down, you'd say, okay, she's going to break down. All right, that's the kind of thing we're looking at. But as far as triggers are concerned, the best trigger here is going to be that if she's going to break down, you wait for that lower channel wall to break. And if the lower channel wall breaks, you'd expect for the price to accelerate down at that time. And if it happens that the upper channel wall breaks, then you'd expect acceleration north at that time. So there's a lot on the Aussie as far as triggers are concerned that we could be looking at right now. But from a wider time frame perspective, it's all about that 440 area. And that 440 area is holding a support right now. The price has been there. She just went and breached it, and she's broken back above that level. She's being supported. As long as the price remains above 440 from a support resistance perspective, you would say that the technical that technically the bulls are still very much in charge of this pair. Again, one of the points that we mentioned in previous weeks was that if we're looking at the price movement on the Euro USD, if we're doing a comparison to what we're seeing on many of the commodity currencies, even if we're doing a comparison to cable, one of the things that we realize is that Euro USD, and because she comprises such a large part of the dollar index, she makes up more than 60% of the dollar index, and so the dollar index is skewed right now because it has been about euro weakness and it has not been about dollar strength. If it had been about the dollar strength, then you would have seen dollar strength across the board. You would have seen that dollar strength at that same time taking place not just on the euro, but you would have seen it on cable, and so you should have seen cable hitting fresh lows. You would have seen it on the Aussie, on the Kiwi, on the Canadian, but we didn't. We only saw it on the euro, and so it's just a case in point for euro weakness rather than a general case for dollar strength, right? Just something to be aware of and to keep in the back of your mind as you're watching these instruments, because it used to be a case in point in the past that, euro's dropping, therefore let's sell Aussie too, right? Euro's dropping, therefore let's sell cable. Euro's dropping, therefore let's sell anything which is crossed against the dollar, because the euro dropping must mean dollar strength. But that is not the case right now. That's not what the charts are saying right now. So just be a little bit aware of that and keep that in the back of your mind. It's going to be about the technical levels. That's what it's going to be about. And here on the Aussie, it's about that 440 area. As long as the price is able to staying above that level, then technically the bulls remain in charge. Only a breach below that level, and it needs to be a significant breach, would have a selling on a pullback. There's potential there that we could use the lower channel wall in order to trigger that, and that is something which is worth actually giving consideration to, right? So it is worth kind of giving consideration to. Other levels which are worth watching on the Aussie, and we haven't drifted very far from it, but if you're going back to the 1st of August or the beginning of the month of August, and you're just looking at the monthly opening price, we're not drifting very far from that. And if she's near that monthly opening price, then what it means is that the month isn't taking direction. You want her to be moving away from there in one direction or another, and that is the point at which it will become easy to get a little bit more excited about this pair. Okay, let's take a look at the dollar Canadian. Dollar Canadian, as far as the technicals are concerned, we marked a level last week, and I'm just going to try and find that. Maybe it'll come up on the H4. Here we go. So on the dollar Canadian, we had a support wall, and that support wall was breached. So we had the price break down under that support wall, pull back. It was support on multiple occasions, and we mentioned last week that as long as the price remains below the support wall, we have a technical short bias in play here on the dollar Canadian, right? So we'll look to sell the dollar Canadian, and we will only change our minds about that if the price is able to break back above that support wall. So if it happens she goes back above the support wall, then the longs come into play. As long as she remains below the support wall, then a short bias remains intact on the dollar Canadian. We don't want to get caught on the wrong side of the momentum when it comes to this pair, and that wall is still intact. It's just a question of how you define risk, how you're going to define risk. Right now, that would mean defining risk to the tune of about 50, 60 pips as far as stops are concerned. That's a little bit outside of my tolerance when it comes to trading the dollar Canadian. The way she's moving right now, that could very well be her monthly range, right? So it'd be a little bit crazy. But a pullback to the wall, and I don't mind risking the short. A break through the wall, a little pullback, and I'd be looking for that same wall to be acting as support, and I'd be looking for the long trade on the dollar Canadian at that point in time. So the wall very much defines the bias. She's below that wall right now. There's no reason for us to be changing that bias at all at this given moment in time. Okay, there are just a handful more we're going to look at. In fact, we're making pretty much good time at the moment. Let's take a look at her sister pair. It's the Euro Canadian. Again, we were looking at the Euro Canadian last week, and the critical area that we identified on the Euro last week was the support which came in at around the 24. Where does it come in? It comes in at around the 24.50 area, so just above that 24 handle. And looking at the daily chart, that was quite important for us. Why? Because it had been a significant support. The price had bounced from there to the tune of the price had bounced from there to the tune of 200 odd pips, 2,000, excuse me, fellas. It bounced there to the tune of almost 2,000 odd pips, 1,800 pips. And when the price pulled back to this area, you would expect that when you have a level from which the price had given an 1,800 pip rally, you'd expect a little bit of a better reaction than the one that you got here, right? So she bounced up to the tune of about 100 pips from that level, and this is the reason why. This is a kind of classic illustration of a principle, a philosophy which I have in trading, which is, I always say, if the price is going down, it can go further, And if the price is going up, it can go higher. And if anything demonstrates that principle, it is this chart of the Euro Canadian. How many people believing that they were trading something, that the trading support resistance or whatever other terminology you want to give, support and resistance, you want to call it support and resistance, you want to call it supply and demand, you want to call it the previous, whatever you want to call it, right, would have been looking at that level saying, you know what, we ought to be buying here, right? And you can kind of see the craziness of that kind of thinking. Ordinarily, what you want to do is just follow the momentum. If it's going down, it can go down further. If it's going up, it can go higher. Let the momentum develop. If there's a momentum which is developed, if there's price which is heading in the direction that you're expecting it to head in, then you just want to be following that momentum. That's all you ought to be doing. You don't want to be trying to be predicting those reversals. So you can imagine a lot of trades getting taken out at that level, right? And if the newbies, they would have been in there. The novice traders, the retail traders, they would have been in there buying at those levels. The price just kind of broke straight through it. But what's important here is what happened afterwards. Once the price broke through that level, in fact, what happened is that she broke down, she pulled back, she made resistance, she pulled back, she made resistance again, she pulled back, she made resistance again. That's what's happened. So from a structural point of view, if we're looking here at the Euro Canadian, this is just very, very interesting right now. And I would say as long as the price is able to maintain itself below that 24 handle, below that 24.50 price area, then technically there is a good case in point for a continuation of the bearish momentum. Now, what does that mean for price right now? Because we're at 22 right now, right? So I'd say, okay, there may be case for a counter trend trade north, right? And it would be counter trend even if it means you're looking at a 200 pip target north. Because as long as she remains below that 24.50, as long as she remains below 25, certainly, I would actually look for continued extensions to the downside and say, okay, we've got room, and if she wants to make a move north, she can make up to that 24. But I would expect for that 24 area, 24.50, 25, to act as a cap here on the Euro Canadian. And I would very much suspect that that we're going to carry on making fresh lows unless we get a momentum break through that area, right? So Euro CAD, again, worth keeping an eye on. It's worth selling. It's worth looking for short trades as the price pulls back up towards that 24-25 area, and only a break of that would be considered to be changing the technical setup on this pair, but well worth monitoring even in the short term, right? So there we're looking at the daily. Here's our structure. On a H4 time frame, and you can see those. You can see that kind of resistance area being quite clearly established. Okay. So EuroCAD being very much monitored right now. Be quite happy to play the shorts if I see momentum developing in that direction. Okay, we need to take a look at Kiwis, and we'll look and then we'll take a look at the Euro GBP and the Pound Swiss. Okay, so Kiwi we're taking a look at mostly because I've got a trade active on this. And she's been bobbing a little bit in and out of the money, but one of the things that we've done is that here on the Kiwi trade, we're using the trend line in order to define the trend on Kiwi, right? So, right, we're using the trend line in order to define the trend on Kiwi. So there's a downtrending line here. And as long as price remains below that line, I'm happy to be playing technical shorts on the Kiwi if it pulls back again. I'll be looking for that hold as resistance again and again. And the only time I would change the bias on Kiwi now is if the price went and broke above that trend line, right? Otherwise, quite happy to keep a technical short bias on the Kiwi, just using that line. And if it happens that the price ends up breaking through that line, then that will give us cause to start looking long on the Kiwi. Until that happens, using the line for bias, if it pulls back again, there's going to be potential for shorts around that trend line. Again, that's something to be keeping an eye on. This week. We do have intermediate resistance which has been established around the 81.30 area, and I wouldn't like to see the price above that. But like I said, she does have room all the way back to that trend line, worth monitoring. Okay, last one's up. Let's take a look at the Euro GBP, and let's take a look at the pound. These are the only two that I have a contrarian view about. All right, so when it comes to the Euro GBP and the pound Swissy, I have a contrarian view about these, and I'm prepared to take counter trend trades. I'm looking for longs on the Euro GBP, and I'm looking for shorts on the pound Swissy. I'm looking for longs on the Euro GBP. I'm looking for shorts on the pound Swissy. And as far as the kind of technicals are concerned, if we're looking at the Euro GBP, and it's just a case in point for some, there's some element of structure here. All right, so I was going to kind of mark it out. On the Euro GBP, we had a broadening structure. All right, so you can see that kind of broadening structure there. Quite often when you get this kind of broadening structure, it tends, and this is something that happens after a significant trending move. So if we're looking at the Euro GBP, has there been a significant trending move? I would say so. You know, we've dropped from near parity over the course of the last 2 years, and we're down now sub 80s, and we've been in that 77 area, and over the course of the last few months, or certainly over the course of the year, you know, we've seen the price coming down from that 85 area. Quite a considerable swing for the Euro GBP. We're talking to the tune here of about almost 750, 800 pips since February, I suppose, right? So since tail end of February, what is that? 750 pips, almost exactly 750 pips. And now we've had this broadening structure. Quite often when this broadening structure takes place, it tends to be a precursor to a reversal, right? Tends to be a precursor to a reversal, and so that is something which I'm anticipating on the Euro GBP, right? So I'm looking for a long trade on the Euro GBP, and it's more a question of what becomes a trigger for that long trade than anything else. Okay, that's the real issue with Euro GBP. Now, I'm all for defining technical levels, right? And it is still about risk definition to me. And so the question on Euro GBP is, okay, how do we define that risk? And the area that I'm looking at when it comes to defining risk on the Euro GBP, there are two areas that I'm looking at. The first is here, and I'm just going to mark that off. So it's this cluster here, and that cluster comes in between 77.88 and 78.20. That's about 40 pips wide. And then there is a cluster which is just below that, and that comes in 77.70 up to 77.90. All right. So from a technical perspective, I rather suspect that as long as the price is able to hold above 78 and it's not dipping below 78, I'd be looking for a higher low to be formed here on the Euro GBP. I'm not looking for the low to get taken out, so that low is at 7,750-ish on Euro GBP, and I would be looking for a reversal to take place from here with significant room to the upside. With significant room to the upside. So if I'm going to be aggressive here, it's going to be about risk definition. The price needs to fall into my hot zones. That will allow me to define risk. And if I can get that risk to within 20 pips, 25 pips, 30 pips, 35 pips, I'm quite prepared to play the long trades. But even then, I would consider it to be a little bit aggressive, and so I would position size accordingly, because I recognize if I'm taking a counter trend trade, I don't have a problem with it, but I need to know that before I take it. I need to recognize that before I pull the trigger. That stops me from being liberal with my position size. It stops me from being liberal with my stops, right? So, for aggressive trades, I would be looking sub 78, between that 78 and 77.70 area, and inside of those clusters, I think I would get fairly good risk definition to be attempting along. And then if it happens that the price starts breaking my direction, and what that means is that I need to start seeing positive hourlies, positive 4 hours, I need to start seeing positive daily closes, and ultimately you need to start seeing a positive weekly close. And you need to see your weekly close on a bullish candle taking out the high of a previous weekly bar. Once you're seeing all of that happening, at that point you'd say, you know what, we can start adding, right? Because here I'm anticipating something, I have an expectation, but you don't just trade an expectation. What you trade is when that expectation starts playing out on screen. That is what you trade. So once it's happening what you thought would happen, that's the time that you start jumping in with the money. And I'm believing that there's quite significant room to the upside here on the Euro GBP. I think that we're looking back certainly into the 80s, pushing possibly into the mid 80s, even in the 85. So sticking my neck out here quite a bit, right? But I think there are enough caveats attached to nevertheless make it quite a safe play. It's more a question of when the money gets involved, right? So it's one thing having an analysis, but it's about when do you involve the money, and you involve the money when the risk definition is good. That's the first time when you can involve the money. After that, you involve the money once it starts playing out in the direction that you thought it would play it, right? So a few caveats here. It has to start behaving how we're expecting it's behaving. That's when we really start getting excited, right? But before that, we're going to consider it to be a counter trend trade. We're going to keep the stops tight. We're going to position size accordingly if we're getting involved in that. And like I said, it's going to be, it's going to be sub 78. It's going to be around about that 77.80 area, 77.70 area, that you are going to get the best risk definition. As far as the current price movement is concerned, we've got a little resistance block which is being established here around the 78.80 area. Trigger for a long trade would be if the price breaks back up above the support wall, and that would give us a throwback situation, right? So Euro GBP, I think there is potential here. Like I said, ordinarily I'm the kind of guy who looks for trend continuation, but this is one of the few pairs where I think that there is potential for trend reversal, and so that is where I'm going to be monitoring over the coming weeks and months. And this isn't something which is necessarily going to play out today or over the course of this week. We just need to monitor that structure and be aware of it, and once it starts playing, we'll be able to jump on the back of that quite easily. Okay, let's take a look at the other one, which is the Pound Swissy. And Pound Swissy and Euro GBP are inversely correlated right now, very much like we're seeing the Euro USD and the Dollar Swiss. And that being the case, you kind of have to make your choice. All right, so the choice you're going to make is you're either looking to trade the Euro GBP long, or you are looking to trade the pound Swissy short. You're going to have to be careful that you don't end up getting involved in both, right? Just considering the fact that they are inversely correlated right now, and that correlation actually is quite strong, right? Even from a structural point of view, they are looking very much the same, but our hot zones on the pound Swiss, the first hot zone that we have, again, it's taken from this cluster on the left-hand side, is coming in at 53.60, and that extends to about the 54.10 area. And as far as risk definition is concerned, we have another hot zone which begins at around that 54.10 area, and that extends to about the 54.50 area. The upper zone obviously is going to give you much better risk definition. It's much tighter, it's much closer to that high, but it would be worth, if the price is heading up there, to be looking for a short trade. Again, all the same caveats attached, which was attached to the Euro GBP, right? Which is that just recognize that this is counter trend. Often when you're taking a trade which is a counter trend trade, you know, we're fighting quite a long-term momentum here, which we've seen develop on these pairs. And so either you would go small position size with that tight stop, or you'd say, you know what, I'm expecting for the price to turn from here. Let her turn first, right? Okay, now that she's turned, and because we're looking for a significant swing, we're not just looking at your kind of 20 pip trade, 30 pip trade, 50 pip trade, something like that. We're looking for a significant swing from around these levels. Then it's kind of worth saying, okay, you know what, if she turns, because there's a lot of room to the downside, right? There's a heck of a lot of room to the downside here, and it's a case of, you know, let her turn. If she turns on the daily, that's a pretty good sign, right? If that daily takes out, so you get that kind of bearish close on the daily, and the close takes out the previous low of a previous daily bar, that's a pretty good sign, right? But at least the momentum will be in your direction before you enter that trade, right? It's just something worth considering. So I don't mind playing these levels aggressively. I don't have trouble with that. But if you recognize that it's a counter trend trade and there's a lot of room to the downside, you don't have trouble with, you don't have that trouble with throwing all your money in market on the back of one horse here, right? You still got to exercise caution, and you really can't afford to be liberal with it. So these two pairs very much worth monitoring, and yeah, I think that there are a lot of correlations out there at the moment. Some very, very strong correlations at the moment. The strongest that I've seen at the moment, it's Euro USD and dollar Swiss. They've broken apart for a long time, but those correlations are back, or they're inversely correlated, and as well these two, the pound Swissy and the Euro GBP, huge inverse correlation on these. And I'm saying here, from a structural point of view, right, that if you're looking at the Euro GBP, and if you just this kind of price structure that you've had here on the Euro GBP, on the pound Swissy, if you turn towards the Euro GBP, and if I just zoom out a little bit, it's exactly the same. It is exactly the same, almost candle for candle, right? So I find that really interesting right now, and but these two charts I am monitoring for a trade. Okay, fellas, that's your lot this week. Those are the charts that I'm looking at. Those are the levels that I have defined as far as the price structure is concerned, or certainly as far as trend definition is concerned, in the medium to long term. So I'll be looking to play those over the course of the week. I hope you've enjoyed this. I hope you've enjoyed this presentation. Thank you all very much for taking the time out to attend this morning. And I will see you all next week, same time next week. In the meantime, if you like what you've heard and you want a little bit more, do take the opportunity to check out my website. It is www.wmdforex.com.